Rescue your money, your savings, and your financial future with a 1035 exchange or 1035X. What a difference a design can make. I don't know what the actual percentage is, but I would guess that 99% of all life insurance agents don't put any effort into designing a life insurance policy other than for the number of years that the premium is to be paid. That is to say, by far, most whole life insurance policies are simply straight whole life with no riders designed to add cash value benefits. They may be designed to have premiums paid up in 10 years, 20 years, up to age 65, or up to age 100, or even age 121. Straight whole life policies have no cash value after the first year and grow cash value very slowly for the first several years. And then, unless the policy is a participating policy with a mutual company, the face value or death benefit of the policy stays at the exact same value forever and never increases. All right, now let me address the 1035X right now, real briefly. Then I'll get back into it a bit deeper in a short while. Please like this video and subscribe to this channel and post your questions and comments here. And please share this channel with your family and friends. Okay, a 1035X or exchange is an IRS rule that allows for the cash value of one life insurance policy to be transferred to a new life insurance policy that is replacing the old policy and without affecting the MEC rules. And I'll get back to this in a bit. So, what are the differences or advantages to designing a whole life policy for greater cash value benefits? There are many, and it depends on what your values are. And I'll get back to that in a minute also. Anyway, let's look at an example. Our model here will be a 45-year-old male, non-tobacco user with standard health rating, and we'll use a $500,000 life policy, or as $500,000 is the death benefit or face value of the policy. And the policy is designed to have premiums paid up to age 100. Excuse me. First, setting up the policy to be paid up to age 100 does a couple things. One, it makes the premiums considerably lower than it would be for a policy designed to be paid for only 22 years or less. And two, it creates the option to lower the premium and face value later on in the life of the policy if the owner wishes to do so. And that's a topic for a different discussion. So now, let's look at what some of the benefits of thoughtful design can make in the cash value benefits of a policy. With a straight $500,000 whole life, no cash building riders, for our 45-year-old male, the premium would be $10,945 per year, or roughly $920 a month. The death benefit would be $500,000, and if the company is issuing the policy is not a mutual company, the death benefit will remain at $500,000 for the whole life of the policy. It will have zero cash value the first year, but would accumulate cash value after the first year at a rate of about 3% per year. If the policy is with a mutual company, by the time our 45-year-old male reaches retirement age of 67, there would be a cash value of $320,184, and the death benefit will have grown to $755,965. But the premium would remain at $10,945 per year. Now, if the $500,000 policy were designed to maximize cash values And using the same premium amount of $10,904, well, actually, that's about $40 less per year than with the no design straight whole life we were just talking about. But the policy would then have around $7,000 of cash value the very first year instead of zero. And that cash value is what we use for the infinite banking strategies. And that's what grows at the compounding dividend interest rate, which is pretty much always going to be more than what a stock company will pay to their policies. So then, by the time our 45-year-old male reaches retirement age of 67, the cash value of the designed policy will have grown to $334,360, and the death benefit will be at $858,346. That's about $14,000 more cash value usable for infinite banking, and over $100,000 more in death benefit. And that's all because of designing the policy with the special cash-rich riders that maximize the cash value benefits of the policy. Now, I mentioned that designing a policy for maximum benefit, depending on what your priorities are. So if your priority is to get the most death benefit for the lowest premium rather than growing the cash value of the policy, again, thoughtful design can do just that. Using the same model of a 45-year-old male with standard health rating and a $500,000 policy, by using one rider only in the design with the base whole life, we can build a policy that has a premium of just $5,400 a year, or about $450 a month. That's just half the premium of the standard no design policy. In that case, the total death benefit stays at $500,000 and doesn't grow, and the cash value grows at a much slower rate, but it does grow. So it acts much like a whole life with a stock company in those areas. But again, at half the premium. Now let's talk about the 1035 exchange. Many people learn about infinite banking after they already have bought a life insurance policy. Only two types of life insurance grow cash value: whole life and universal life. Universal is not recommended for infinite banking for a number of reasons, which is a different discussion. But universal policies can grow cash value. Term policies, on the other hand, never grow any cash value, so term policies are useless for infinite banking. So if you have a whole life or universal policy that has some cash value in it, you can still take advantage of having a well-designed participating whole life policy built for you so that you can take full advantage of infinite banking. And that's where the 1035 exchange rule can help. A whole life or universal policy that has cash value can be exchanged for a new whole life policy. The old policy really only has one thing of value for the exchange, and that's the cash value in the policy. Since that's the case, you might ask, well, then why not just surrender the old policy and take the cash value instead of exchanging it or transferring it to the new policy? Well, you can do that, but there may be taxes due on the cash value that way. By transferring the cash value into the new policy with a 1035 exchange, there will definitely not be any tax on the cash value. And that cash value will immediately begin earning dividend interest with the new policy. And that's very valuable in a couple of ways. The 1035 cash value kickstarts the compounding interest in the new policy. And even if the cash value being transferred puts the total going into the new policy over the MEC limit, because it's being transferred from another policy, it's exempt from the MEC limit rules. We have another video explaining MEC limits and what a modified endowment contract or MEC is and how that affects policies here on this channel, so you can check it out. And again, we're talking about compounding interest. So the more you start with, the more it grows. It does not matter that the old policy and the new policy are with different companies, and all the work involved in doing the transfer and terminating the old policy is handled by the insurance companies. All you have to do is sign an authorization form. Well, what about rescuing savings and financial future? My friend, that is what infinite banking and the tax-free cash growth warehouse strategies are all about. By moving your idle savings into a properly designed, participating whole life policy, you automatically triple the value of your money at the very least. Even if you do pay premiums until you reach age 100, the policy will then pay out 3 times the total you've paid in, and that will be tax-free. By moving your idle savings into a properly designed participating whole life policy, you will have access to your money tax-free, while it continues to grow with the high compounding dividend interest. And that can provide you with free financing for purchases and eliminate lost opportunity costs. If you're new to all this, you should really watch our free 60-minute webinar here on this channel. It's titled Become Master of Your Financial World, which explains the infinite banking concept and the advantages of putting it into use. Meanwhile, if you found this video to be helpful, please like this video and share this channel with your family and friends. You can also pick up my 2 books on infinite banking and the tax-free cash growth warehouse strategies on Amazon.com. They are titled Tax-Free Cash Growth Warehouse, the 178-year-old secret, and Tax-Free Cash Growth Warehouse Nuts and Bolts, which details 10 practical ideas of the strategies. So for now, aloha and mahalo for watching.